Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story of a serious founder who built a valuable software company and did it without big funding. I'm your host, Greg Head, and this week my guest is Raj Bhaskar, the CEO and co founder of Hurdlr. It's his second venture, and he's a practical founder, and this thing is already picking up steam. But he's been in this business for 13 years. It's been a slow roll to get going, and it's an amazing profitable, growing software company that is in the white label embedded software space, as we say now. So he builds software that works inside other software, and in particular, accounting software. So you're going to hear about his journey, why he invested his own money to get this thing going, and how he is net lifetime profitable in this business and where he thinks this is going. This is a very serious practical founder building a valuable software company, going long and doing it his way. It's an amazing story. Hey, Raj, welcome to the Practical Founders Podcast.
Thanks for having me, Greg. I really appreciate it. Excited
Yeah.
to be here.
Yeah, it's good to see you again. We've talked a couple times since we met in person in San Francisco at the Vertical SaaS conference, Tidemark's Vertical SaaS conference, where in the same room we had founders of industry-focused SaaS founders who are getting up and running and bootstrapped and funded. And of course, on stage, we saw those. We got from 1 million ARR to 1 billion ARR, stories right? On stage. So there's a lot of space in between those two, and I'm glad you're on the podcast to share your amazing story of Hurdlr. Where are you these days? Where are you today?
I'm coming from Washington, D.C. We're headquartered in D.C. We've been here coming up on 13 years from incorporation, which is pretty awesome. 13 years. Some parts flew by.
Yes. And other parts didn't, probably. So we'll get into those. Yeah. So isn't that interesting? If you say, I've been doing this for 13 years, like you go to Silicon Valley, they say, I'm sorry to hear that, right? It's not a rocket ride explosion. It sounds like you're trapped inside this business and can't get out. But you have an amazingly healthy business and a big smile on your face, and you really enjoy doing it. So your second venture, we'll talk about your first venture as well. Hurdlr is spelled HURDLR.com, and people can go there. Let's just start, Raj, with what is Hurdlr and about how big is it now?
Sure. Hurdlr provides embedded accounting solutions. So we provide QuickBooks and TurboTax like functionality specifically for small businesses, but we do that as embedded and white labeled into all the different software platforms that support small businesses.
Right. So just to be clear for everybody, get that terminology. Do you sell direct to small businesses these days who want to buy your software on the website?
We don't. We did by necessity in the first 5 years.
Okay.
That wasn't the original vision. Yeah. And that actually gave us quite a bit of experience, necessary experience that we've leveraged to the benefit of our enterprise clients that are the small business platforms.
Yeah. So you provide accounting software as a feature inside other small business software that says we do payments, we do this. Maybe the problem was, and then we export some files and then import them into QuickBooks, and it's a real mess. And we don't use 99% of QuickBooks features. And, why don't we do that? So that's also called white label. You don't sell to end users. You sell to software companies that sell to end users, and you serve them. Embedded is the new word for that, and so forth.
That's correct.
So, and about how big is the company with customers, end users, employees?
Sure. So, we started off first 6 years where we were direct SMB, and then over the last 6, we converted to embedded, which was our original vision. And so we've served over 1.3 million small businesses now. The first few 100,000 was through our direct SMB.
Yeah.
So the majority has now been through embedded. Company-wise, we're now 21 employees, which is, I think that's kind of fascinating because we were 14 in June. And so we've increased the staff by 50% in 4 months, but this is after almost 13 years. I think that's pretty funny. But it's also fascinating because you don't get to, I'm not like some market maker. I don't get to pick, like, I didn't time the market correctly. So one could argue we started the company pretty early.
Yeah.
But I'm proud of it. And what you said about Silicon Valley, I get turned on when I meet a founder who said, "Oh, I've been running this for 20 years." It's fascinating. I love that.
Yeah. So we'll talk about you going long and how you're doing it your second time after learning presumably some lessons from the first time you started your first company. Can you tell us about how much revenues in the business, or give us a hint?
Sure. Some hints, I think, because we're private. We haven't raised much capital. So after 13 years, several years ago, we became lifetime to date profitable after having burned over $5 million along the way. We're paying multi-million in income tax every year now, which is bittersweet.
Multi-million in income tax. So that's a hint for people there.
Yeah.
So
and we're adding a good amount to the balance sheet every month. Yeah. Awesome. So not humongous. We have a lot of space to growth around here. I've been talking about, which is also just fascinating. I've been saying, like, we're just getting started, which is crazy to say after 10, 12 years, but you see the inflection point of like team growth. And we've hit that inflection point. So now it's time to start growing. We're going to grow profitably.
You're home free here. It took you a while, I guess. And did you personally make investments in the company, write checks into the company?
Absolutely.
For a while? Okay.
So
and your brother is your co-founder, your technical guy. Would he also contribute?
Absolutely. So we're co-founders. We started this together. We incorporated at the end of 2011. So coming up on 13 years.
Wow.
We put in the first $3 million. And that got us through the first, I think, 5.5 years. So we didn't burn like crazy money, when you compare it to like that time frame. But still, it was our own. Then we finally got our first API lead after that many years, and we pivoted to direct SMB initially. We built the whole API, then we didn't get any leads. We built the product around the API. I did that as a showcase of the API to generate.
Oh, I see. Right. To show that it worked. Yeah.
Yeah. And then that ended up taking a life of its own. And then we finally got the API lead. Then we raised a tiny bit of capital.
Like angel or institutional seed or something? What was it?
Yeah, VC, but one VC, TTV Capital. They're 100% fintech. They've been in fintech since before it was a term. They were seed investors in Bill.com all the way to IPO. Greenlight seed investors. So really, really good guys, and they had built a relationship with us for 1.5 years. And so we did that. They have 10% of the company. Team owns 90%. And so I think a little bit is good to professionalize in some cases. And it was helpful for us at the time. It was either that or I was going to put in another $1 million, and I was being discouraged to put more money. But
is this big VC funding? They expect the unicorn exit, or is this practical institutional funding?
No, this is practical.
I know you're going to grow slow, but it'll be a steamroller. We're with you.
This is practical. Overall practical. That's how we run the company. I think we're an anomaly in the portfolio of them. They love us. We grow consistently. My view is everyone will do well whenever there's some future exit. And there are things we do on a daily basis that might turn well into incredible.
Okay.
But we're not betting the house on it or anything
on
like
incredible.
That.
Right. Yeah. Well, you said something before. I know I presume you're a frugal guy and you manage your money. You make accounting software. This is your second kind of run your business accounting financial software that you've built. but you said lifetime profitable. So that means you burned money as you were investing and taking a little investment, and even practical bootstrap founders, that use their time, right? There's an investment period as well. But does that mean that you have delivered more profit in the business net, all those other investments over time? Is that what you're saying, Raj?
Yeah. So let's say over 5.5 years, we lost $5 million.
Yeah.
Uh, but lifetime to date profitable means that our profit recovered that
Yeah.
5 million plus on
I
top of
love
that
that.
we're ongoing profitable.
Yeah, I'll see
Um,
you at cash flow, and I'll see you at EBITDA profitable, and now we're at lifetime profitable. So
correct. So profitable
uh,
in every category.
I
Yeah.
love that. That's
Yeah. It
great.
comes with the side benefit of now having to pay income tax. And then, the government last couple of years was stuck on R&D tax credits. So we're
Oh, right.
amortizing software development costs, which is our number one
Yes.
expense. But
Section 174
I
here.
think that'll probably get corrected soon. Yeah.
I hope so. That would be amazing. Um, and we can talk about that. Well, what an amazing journey here. And I could probably guess between 21 employees and a certain amount of profit that you're doing quite well after all these years. And we'll go through your journey. Um, and you and I have talked about this. You have no intent to sell anytime soon, even though you have an institutional investor that puts money in to get paid back later, as I presume you did as well. But do you have a theory about what could happen here? Going long, especially as maybe you're picking up speed.
Yeah. I think the way we've operated Hurdlr is just to add value every single day, build a real life and like lifetime entity, a breathing, living thing.
Yeah.
So you have to build it to be sustainable, proper. Customers get value out of it, all the service things,
Hmm.
uh, and really with no timeline of anything in mind. So if you build a proper business, it should live forever.
Yeah.
Uh, and then maybe along the way, a strategic partner comes along and presents a very compelling case, and you really get the 1+1 is greater than 2.
Yeah.
And can you truly grow even more after that? I'm 47. I had prior venture, and I really I want everything to be incredible, like every single aspect.
Yeah.
Yeah.
Well,
So
it's
that's basically
fascinating. And you and I talked about some amazing things in your business. But even just to say that you've raised some money, you've put your own money in, it's now profitable. But to say, the first definition of a good business is it's sustainable and will run for a long period and continue to grow. And as you said, will continue to grow after you sell it without the founders running it here, which is like a Jim Collins, Warren Buffett kind of approach. I don't know, is that anti VC funding approach? I would say so. But
I
yeah,
think it's different. I think there are, probably it goes against like traditional like Silicon Valley style.
yeah,
That's more like growth at all costs and
yeah,
aggressive growth, and
yeah,
the business goes boom or bust. That's never how, like I appreciate that.
yeah.
I
It's a
think
way to
I'm
do
an
it.
angel investor in companies like that, but
Yeah,
it's not my like for me
yeah,
to personally run. Yeah,
yeah. Can you give us an example, Raj, of a customer of yours, a B2B customer, not an end user, small business customer, that uses Hurdlr inside their product and how they use it?
sure. So one example of a horizontal SaaS client would be Zen Business. Zen
Oh,
Business does online incorporations. They're like a LegalZoom competitor.
right.
And they have a product called Zen Business Money. And Zen
Hmm.
Business Money is white labeled Hurdlr. And it allows you to track all your business finances from invoicing to income taxes, everything in between. They do a lot of incorporations per month. They get a good percentage of the, it's well documented how many new businesses get created every month. It's
Hmm.
quite a bit. They get a good
Yeah,
percentage of that.
yeah.
And great client. And it's a great fit because these are businesses that are just starting out. They don't have anything yet to manage their finances. So it's a great use adoption rate, take rate.
And the features then that Zen Business gets in their product are invoicing, take payments, be able to do financial statements,
Correct. Yeah.
track expenses. I don't know, taxes too. You also get in tax. You mentioned like TurboTax plus QuickBooks.
Yeah. We
Uh,
built a real-time income tax calculation engine for all
real
50
time.
states and DC. So we maintain all these rules. It'll give the entrepreneur real-time income tax estimate without talking with the professional. It's just there, and it's leveraging the deductions along the way and
Yeah.
taking into account their income. So they get a sense of like what they might be on the hook for.
So is it for those businesses just starting out that need QuickBooks Lite, right? More than a spreadsheet and the mess of that, but more. QuickBooks started. I used to use Quicken. This
Mhm.
is 30 years ago. The old Quicken was easy banking software, but they realized half of their customers were using it as easy business accounting software, track ins and outs and cash and so forth. Is it positioned in between? Is it that kind of thing when you need more than a spreadsheet and you want to do those basic things? But QuickBooks is still designed for accountants. But is it just in between those, or is it as powerful as QuickBooks?
It's as powerful, but a couple of things. So in terms of ideal customer profile of the small business itself, it's from start to just about anything QuickBooks can do. Where we stop is like if a business needs like a NetSuite or an Intact or something like that.
Okay.
But it's full featured. But the one thing we did differently that, well, two things. Obviously, the business model is different because we're white labeled embedded. So our
Right.
customers can own the entire customer and user experience.
Right.
But product
From
wise,
customer acquisition to delivery to getting
correct. Yeah.
payment to running their accounting, so they
Yeah,
don't
absolutely.
they don't
Yeah.
even need QuickBooks or
Right.
anything
You
like
won't
that.
you wouldn't see the QuickBooks brand. So like Zen Business doesn't need to show the QuickBooks brand or anything like that.
Right.
It's all Zen Business. But the one thing that we did that really differentiates the product from a QuickBooks is that we have separate UXs for owner operators than bookkeepers, accountants. So
Yay.
most owner operators, they don't know too much about journal entries, general ledgers, and monthly
Yes.
reconciliations.
Right.
So we separated that out for bookkeepers and accountants in a separate UX, and owner operators get the quick info
Ah.
that they need, like
Yeah.
profitability, cash flow, things like that.
The good stuff to run your business.
Yeah,
And most small businesses, as everybody knows, they're kind of running blind when it comes to finances and cash and profitability and taxes and all that good stuff there. So you say you've had over 1 million businesses use your accounting software,
correct. Yeah, 1.3. It's over 1.3 now.
right?
Yeah.
Well, in the U.S., there's 5 million companies with more than 20 employees, and some of them are smaller. But do you have any sense for how many customers use the QuickBooks accounting software, not their other QuickBooks tools?
Well, what I know is that so we commissioned third-party research. They did a survey of 750 small businesses,
Okay.
and 62% use nothing or a spreadsheet.
Right.
And then, so the remainder, 38%, the majority of those 38%, the top product will be QuickBooks. But the
Right.
fascinating part is the majority of businesses use nothing, and that's the greenfield opportunity is humongous.
Yeah. Yeah, that's kind of the myth that every small business uses QuickBooks, but QuickBooks is really up the food chain quite a bit.
Yeah.
When you
And they're
have to call an
moving.
accountant, that's when you get QuickBooks and stop using your spreadsheet. The accountant tells you to get QuickBooks, get serious there. What an opportunity. So I guess that's the opportunity is
I think
to,
so. Yeah.
to,
I
in,
think, yeah.
if you're a dentist, for instance, your dental management software, I could imagine tacking on the accounting software there so you can track all your expenses and profitability right in there, and it's all integrated and connected. There's got to be thousands of those vertical SaaS apps that could
Absolutely.
use accounting software as yet another feature to charge more for or upsell or something like that.
But everybody wins. That's the thing, because
Yeah.
the business owner wants everything in one place. Once they find
Right.
the VSaaS provider that they love their product, they love their service, they get them, the terminology, they
Yeah.
want that platform to add everything else in. They don't want to deal with 10 different things.
Right. Well, and you and I both heard that at the Tidemark Vertical SaaS
True.
conference. The story of core software for verticals of every size, big verticals, small verticals, micro verticals. Uh, there's software that those dentists or specialty folks use to run their entire business. And there was half a dozen providers there who came and said, our only focus is embedded X for these kind of vertical SaaS companies. So building all-in-one solutions and embedding to do that is a core vertical market SaaS theme, I
Absolutely.
would
There's
say.
embedded accounting, embedded payroll, embedded bill pay.
Yes.
Yeah, quite a bit.
Check, check, check.
Yeah.
Okay, great. Well, congratulations on an up and running company and that's healthy and growing and lifetime profitable. Let's talk about your background briefly and what you did before you started Hurdlr that got you
Yeah,
in this direction. Accounting
absolutely.
software is not for the faint-hearted. It's actually quite substantial. So, you know, it's a monster,
Yeah.
generally speaking, to code and so forth. But uh, how did you get your start in the software business, and how did you end up at Hurdlr?
When I was 23, my first software business was vertical ERP for public and affordable housing agencies.
And what is ERP? That's a form of big organization accounting, run your business software, but it's
Yeah.
enterprise resource planning. Do you have a different description
Yeah, I
of
mean
that? Yeah.
that is the definition of it, but I think in practical terms, I think it's software that is used as the operating system for that particular business. They use it every day to run the business.
Right. So you had a run your business software for what particular niche of a niche industry?
Yeah, yeah. Public housing agencies. It's, there's 5,000 public housing authorities all around the country.
Hmm.
Every basically every city, state, county has one, and so quite a bit. And we had about 25, 30 different modules all integrated. So in Hurdlr is just accounting. This was accounting plus all these other things, and
Right.
definitely niche of a niche. I mean, you're talking ultra niche.
But also a very large industry, and it's been around here.
Yeah, I mean, it's an important
Would we
industry.
call this Section 8 housing with the
Absolutely. We
federal
had a Section
supported?
8, we had
Yeah,
a whole Section 8 suite, then we had a public housing suite,
right.
full accounting, payroll. We built all these things. It's an important industry. I'll say from a software perspective,
Wow.
when I started, I didn't even know what TAM was. I learned
Right.
a few years later that
Total addressable market.
this
Yes.
is a very small market,
Yeah.
and that's relevant to the current venture. But yeah, I cut my teeth and I learned so much from this was from 2000 to 2010,
So,
pre cloud, pre SaaS.
and what caused you to go build this heavy duty software for are these government agencies?
They're fun, yeah. Basically, they're mostly government agencies. They're funded by government, um, so a lot of
Seems
it
like the most difficult corner of the software business,
oh
but
my
like,
goodness,
how did you get into that?
it's just crazy. A lot of it had to do with my dad. He had a broker had reached out to him with a existing business for sale with no money up front, and it was a DOS. They had DOS
Yeah.
software, so that's part of it. My family, so my parents had a government contracting business. I'm
Mm.
from DC.
Yeah.
The government is just anything government related is fairly common. Versus like I think if I was born in California, I
Yeah. In
probably wouldn't
Silicon
do
Valley,
anything.
we're the
Yeah,
opposite. Everything
yeah,
startup.
yeah. So I think that's like it's very organic. Um, I think
Yeah.
it's the TAM thing was pretty interesting because we exited to Yardi.
So you built this up as a successful company with
Yeah,
lots of
absolutely.
customers. And can you say roughly about how much revenue?
Yeah, it was close to 10 million.
In revenue. Okay.
Yeah, and if I recall correctly, though, the first 5 years, we got it to like 2 million in revenue. So it was the
Yeah.
second 5 years where the growth really
Yeah.
happened. It took 5 years to build our reputation, and
Yeah.
that's that's a lot of work. Um, and it was a small market, so every deal mattered. Like every attainable deal really
Precious.
mattered.
Yeah. Yeah. Isn't that interesting? So how long did it take you to it was that was a 10-year business to
Correct.
10
10
million
years and two
roughly? And
months.
yeah.
Yeah, 10 years
And
and 2 months to be exact. Yeah.
and you sold it to another kind of, let's say, real estate software company?
Yep. So Yardi, recently more folks learned about Yardi because I think they acquired WeWork. But yeah, but otherwise, their core business is they have about half of all U.S. apartment buildings running their property management software,
Okay, there we go.
and
Yeah.
they're in every real estate niche.
Yeah.
And so the fascinating for me, it was a pretty fascinating. Like we were ultra niche. We built this ERP and accounting software for specifically for this niche, and we exited to it's almost like one level up because
Yeah, yeah.
it's still vertical specific, but it's to support all the different types of real estate, not just the one that we did. And Yardi's number one competitor was RealPage, and RealPage didn't even build their own accounting; they integrated with Intact. And the short version of the story, like genesis of Hurdlr, like my concept for embedded accounting, and we didn't use that terminology back then. Embedded, it was more built in.
Built
Was
in.
that how do you get the best of? Okay, RealPage didn't build it in house, but how do you get the feel that it's built in house, the vertical specific, but unlimited TAM? So supporting all kinds of verticals, not just like a real estate vertical, but any type of vertical. That
Right.
was the concept. And
Yeah.
I had it on one piece of paper, and we
Yeah, and
called
that
it
company was
Backend as a
called
Service.
VisualHOMES, is that right? Is that
Correct.
what it
Yeah.
was? Okay.
First one. Yeah.
And did you have any outside funding to
No,
grow that?
zero. Yeah.
So that was totally bootstrapped. I mean, I'm talking, that's serious grit here to build an ERP management, run your business, deep software. That
It
is
was hard
not,
work. Yeah.
it's not like a little marketing tool or something
No,
like that.
no.
And to sell it, was this life changing wealth when you sold it and did a couple years with Yardi?
Yeah, I'd say so. I mean,
Yeah.
I'm very low key, so like
Yeah. I see that.
I didn't really go out and buy anything. I got things that were part of the normal like life stage. I was at the life stage, and I got married, so I got an engagement ring. I got a
Yeah.
house
Yeah.
eventually. Normal stuff, nothing
Yeah.
crazy. So yeah, absolutely. And I think it was also life changing in the sense all the learning
Oh, yeah.
from those 10 years that have absolutely been applied to this current venture.
What was the biggest learning there without telling the whole story of your Visual Homes first adventure? But what was the biggest takeaway that you said, this is my insight or the thing I'll do differently the next time I do it?
It was that any venture is a team of people that have the same amount of time every day to do something. And so you choose what you're going to work on, and if you have a smart team of people, you should probably be going after something really big.
Right. So you kind of wanted to turn it up like, okay, we were a smart team. We conquered this thing, but it didn't give us enough runway to go do something with big impact there.
Yeah.
So, what is it about the same hours in the day? Like, smart people can prioritize better and sort out all the things you could possibly work on. They don't have more hours in the day than anybody else.
Yeah, that my thought on that was just what's the difference between five people, on the West Coast, five people on the East Coast, five people in some other place. It's just five people with 24/7.
Yeah, yeah,
Everybody has in that viewpoint, I felt that generally everyone has the same resources. So if you have a handful of good brains, then what do you need? Electricity and internet?
yeah, yeah,
Yeah.
yeah. Well, that was a turn like that 2007 to 2010, where we said, need servers and offices and teams and all that stuff that quote required VC funding as much in the old days.
Yeah.
You
I
could
mean,
just
it
go
was
and
just going in that
yeah,
direction, right? Because
yeah,
Salesforce is, Salesforce is 99. You're talking about
yeah,
2007, 10. Yeah. It's like,
right,
I think, well, AWS basically was
yeah, yeah,
much more
right.
popular. So you didn't have to buy servers. It was still on the cusp. So like if you had tendencies, you still could.
Yeah.
Yeah.
So you did it in the pre-SaaS days, but this was web software, presumably on your side. Was it web software or Windows software?
Started off Windows.
Okay.
Yeah.
Wow.
And then second half, we converted over.
Yeah.
But it it wasn't native cloud to begin with.
Yeah.
It was on-site implementations, professional service teams, on-site training.
Those are the days.
Right. Oh yeah. So you learn a lot. Another big thing I learned from that was really just service culture. And I started this company with service culture that no matter what we do, we have to provide excellent services. And that means human assisted services, because I always viewed that as a differentiator. That's something that nobody else can rip off.
Right. And if you've got a core system that runs their business and it's down for 20 minutes, like, it's a problem. So you gotta be there. It isn't just an add-on, a light little thing. So you love that core game, right? Right and do it seriously. Was your brother involved? What's his name?
Anu.
Yeah. And was he involved in your VisualHOMES adventure and then Hurdlr, or?
A little bit. So he was there for exactly 1 year.
Okay.
He was a software engineer at Lockheed Martin, working on big systems, and the value of Lockheed was I think it was like 6 Sigma. He was certified.
Oh, yeah.
They do like all these crazy processes, but he was talking about getting into business, and I thought we were probably going to exit.
Yeah.
In the next 6 months, and so I said, if you want to join, like, now's the time. So he became head of R&D. He joined August 1, 2009. We exited July 31, 2010.
I'm sure he got a little gift from that and a little momentum. Thanks, big brother.
Well, he did. The founder of Yardi wrote his recommendation for Columbia MBA.
Oh, very nice.
So he went and got his MBA. He has a computer science degree from UCLA. So he's qualified to do this stuff. It's not just that he's related.
Yeah. So when you were, 2010, 2011, that was when the frontier of B2B SaaS was really kind of opening up. It wasn't the Wild West of, there was a few before then, but it was starting to go. VCs really didn't understand it yet. And it wasn't so common in every business, but all of us entrepreneurs could see that's when the SaaS revolution was really moving. And you said you built your first business, VisualHOMES, for a very small, finite market, and you wanted to think bigger. And when you think bigger, you can attract better people. Those 5 people who want to swing big, like your brother and the rest here. It sounds like the Netflix thing, which is, we knew someday we were going to be this, but we have to start today with CDs before streaming becomes universal. Is that how you thought about it? Like, it's an API, but we just have to sustain ourselves until bigger companies can trust us with a core system like this?
Sort of. I certainly didn't think about Netflix. And I think, so I did start it with a 10-year outlook in my brain. Okay. Just, this is going to be at least 10 years. And I just came off of 10 years, and I thought, no issue. So one thing was that we need to keep the lights running. Don't burn too much. I think I certainly mistimed. We started with API. We called it backend as a service. This was before banking as a service existed. That's how long ago it was. So the term embedded wasn't there. And I think we were just too early in that sense. So because it took 5 to 6 years to get our first API lead, which is crazy. So we did that direct SMB in between, but. So yes and no. That I looked at this at minimum 10-year outlook, and it's going to take time, and we don't know when things will hit. But no, in the sense I definitely didn't think it would take 5 to 6 years to get an API lead.
This week's podcast is brought to you by my friends at Fullscale. Last year, I interviewed 3-time software founder Matt Watson on this podcast about his successful practical founder journeys. Matt leveraged offshore development talent in his last 2 SaaS companies to hire quickly and scale up efficiently. His top developers and designers were offshore in the Philippines, but they weren't one-off contractors, and they weren't difficult to manage outsourced agencies. He found an endless supply of top tech talent who became savvy members of his team, working hard every day to get things done. So for his 4th tech venture, Matt created Fullscale, which is one of the fastest growing software development companies in any region. Fullscale vets, employs, and supports over 300 professional developers and designers and testers in the Philippines who can augment and extend your core dev team. I know practical SaaS founders who use Fullscale to grow faster and avoid the product development nightmares that can kill a growing startup. So visit fullscale.io and see why their approach works so well, and book a call to see if they can help you. Now back to our podcast. Well, you had to prove that the software worked, and I guess having end user customers that use it every day and rely on it, and some quantity of those was proof. Did that also create enough revenue to sustain the business as you're expanding features? I'm sure you guys, built this big app over time.
Well, so when we put the direct SMB app out there as a showcase of our API, I did it without subscription because it was just supposed to be a showcase. So for 2.5 years, it was completely free, but it got built up to a few 100,000 monthly active users, and we were burning money. We were burning money just on the operating costs. The folks,
and you were still thinking, like, I just need to prove this is work so I could sell it as a
just need an API lead. Just need an API lead. And then we turned it up. We turned on subscriptions in like 2 phases, and then I think year 6 is when, right before we got our first API lead, we were profitable on a go forward basis on direct SMB, and it's just like, wow, that was all that work, and now we finally got the first API lead, but we're profitable on a go forward basis, which was nice. So we're not burning anymore. Right. And there was that decision of, okay, whether to put in more money of our own or take some outside. I was more for just putting in more of my own money. And
why is that? Were you just philosophically opposed to having outside investors in the shoot the moon Silicon Valley style VC risk profile, or you didn't want to give up control, or because you had already won a prize and you were writing checks into the business?
Yeah, I think it's not really any of those. Those are, okay. I think those are, if I think deeply about it, maybe those come up, but the main reason is because I actually view other people's money as more, that's a bigger risk. It's a bigger burden on me.
Yeah, it's more precious.
Because
more
then I have the pressure they're giving money because they want to make more money. So I have to make sure they make money. And I take that even more seriously than my own.
Yeah.
And so that was the bigger thing that I didn't have. If you look at that point at the past 5 to 6 years, I didn't have clarity when I started. I was incorrect of when are we going to get API customers, when are we going to get API revenue. So I don't want to just take that's just me personally. I don't want to take someone else's money and then it doesn't happen, or I don't have full clarity. That's separate from, I still have the conviction and I'm going to work towards it, but I already learned that I can't predict when it's going to happen. I definitely had a conviction that it will happen at some point. But if you asked me when I started the company, I certainly wouldn't have predicted that the first API lead comes 6 years later and it turns into a real, like, excellent business in year 10. Although I did have the 10-year outlook, but anyway.
Yeah, no, I get it.
Different thoughts.
That timing thing, we've talked about TAM, the total addressable market. You're kind of aiming for a wider, bigger market here on your second time, but the timing is more important than the TAM, really, for most practical founders, to be able to sustain yourself long enough to get traction and figure out what the business is and whether it's worthy of a big moonshot or not, right? So
absolutely. Timing, very important. My fail safe is like, I'm down to put in more so I can buy more time. And, that's a luxury that I have after I put in the first 10 with no luxury. Yeah.
You had conviction that there was an opportunity here. When did you get sufficient proof for yourself that, wow, this is really working for the small businesses we serve, and then eventually the API? I mean, did you have some epiphanies in there, those product market fit journeys? And, when did you really know that QuickBooks wouldn't come down here and Excel won't go up, and you've really got something that's going to be sticky?
5 years ago, maybe.
Okay. Yeah.
Maybe only 4 years ago.
Was that when you started to get software companies now embedding?
Absolutely.
Instead of adding people to their R&D teams and building it themselves, they would buy and embed. And
I
some
felt it
work.
after we had our second API customer,
Okay.
not the first.
Wow.
I mean, I was certainly happy with the first, but when we got our second, it's not a trend per se, but it was
Yeah.
enough that,
Yeah.
you know,
You could feel it.
yeah,
Yeah.
this is finally happening. Still, it takes a lot of time, and in this type of thing, especially early on, like you get a client, you're getting the client live and running and out there, and then there's learning. There's a lot to this.
Yes. A
It's
lot of stages.
similar
Well,
to ERP implementations in some
yeah.
ways, but
Yeah. Right. Because you're working with their R&D teams and helping them design it into their apps and so forth. I think it was even mentioned at the Tide Mark. There's not just build it or buy it, because even when you buy it, you still have building to go integrate it. It's a really, you're expanding your product by bringing in this functionality. You don't have your customers don't have to write an accounting software, but they still have to stitch it in and figure out the support and selling model and so forth. It becomes permanent functionality of their app.
yeah, absolutely. I mean, in most cases now we've reduced it to almost just a go-to-market function, which is nice.
Yeah.
But even a go-to-market function still takes work. You want to
Okay.
nail it right. And now we have a lot of data points, so we help clients with their go-to-market functions.
Yes.
But
Yes.
yeah, it takes time.
Yeah. Can you say how many software products embed your software and use your software inside
Sure.
their products?
Yeah, a couple dozen.
Okay. And each one is pretty substantial. So these aren't small kind of deals. So why do they choose to embed your software rather than buy it themselves? Is it just so far gone that they could never consider writing this kind of software themselves? What is the decision process you have to overcome in white label world?
Well, I think it's the decision process to overcome is really the priority. Most vertical SaaS, horizontal, like most small business platforms want to embed this. They don't want to give their money away to Intuit. Their
Right.
business owners want everything in one place. So most want to do it. I think the biggest objection is when.
Right.
So
Okay.
is it 5 years from now? Is it 3 years from now? Is it 1 year from now or 6 months from now?
Right.
So I think that's the top thing. It's the priority. It's because
Mhm.
businesses only have so many people to implement different things and initiatives, and what's the
They've got other
ranking
things
order?
on the
Yeah,
1 year list and they can't
yeah.
get to it, right?
So you have to show clarity on path to revenue and profit for the platform.
Right. Is it typical that they charge as an add-on or a module or an extra in their product? Uh, they have their own pricing scheme, and now we have accounting features in our core app. Do they all charge an extra price for it, and that's part of your business model is helping them grow their revenues?
Yeah, I think there's that. We have clients who do that. They do it as an add-on. They might give one thing away for free, and then
Yeah.
they do an upgrade.
Yeah.
Others that have existing tiers, they might mix the
Yeah.
features into the
Yeah.
different tiers, so they get higher take rates. And then lastly, we have some clients that we call them branded national virtual bookkeeping providers. So their
Oh,
service is a human assisted virtual
yeah.
bookkeeping,
We'll do it.
but
Done for
as
you.
like a national brand. And those platforms, they use our embedded accounting as their operating system.
Right.
So there's a company called Collective, for example. Collective Accounting is white labeled Hurdlr, and so that's kind of a one to one. So every client they bring on is that's just part of the service. They're charging a few hundred a month for their virtual bookkeeping service. So it's just it's just part
Do
of the
they
operating.
integrate that into their client management system and so
Yeah,
forth? And clients see one end of it, and
yeah.
the
There's the member experience and then the bookkeeper experience. Yeah,
right. So they're the bookkeepers, and they share the owner or operator view with their clients.
correct. Yeah.
Oh, that's really interesting. And I don't think, I mean, I guess you could use individual instances of QuickBooks there, but that's kind of impractical, really.
Well, they started off that way,
Yeah.
and then they switched to zero a few years later, and then a couple years ago we got them on board, and they've since converted thousands from both QuickBooks and zero, and we built like multi-year imports from both systems.
Right.
Um, so
Yeah.
it's nice to, and that takes time. So that's not
Yeah.
something we could push out in 2 years to have that type of feature parity where you can import from those
Right.
systems.
Right.
So that's a level of maturity that definitely it takes time, and I'm proud of that. It's pretty neat to have a bookkeeping platform convert their customers from QuickBooks and Xero into ours programmatically using our own API.
And it's not just the data coming over; is you have to do all the stuff that they were doing over there.
It's data and workflows, and and I'll tell you, as a software business, it's really incredible. So in my first business, it was incredible to have customers use it to run their entire business, like, and have it support public housing. Now I feel like we're at this this next level where we have companies providing our products with their brand on it.
Yeah.
It's just incredible to be a part of that, still supporting all these small businesses, but other companies are believing in us and putting their brand on it.
Right. And your TAM story is you have the ability to go reach millions of small businesses.
Absolutely.
But you're reaching them through these software platforms that embed your software. So your TAM is about your end users, right? And
I think I actually, for our purposes, I feel like we have an unlimited TAM.
In software platforms, you could embed your software.
Correct. Yeah. Like, how could we possibly reach out?
So explain that just so people could see. Like, there's an unlimited. There's tens of thousands of vertical SaaS platforms.
Absolutely. And the platform supporting small businesses. So you could say, well, okay, the total TAM, if you tie it to like the number of small businesses, that's the total TAM. But the way I think about it is what we're going, we can take the wildest growth measures. We're still there's markets to be taken. It's just unlimited basically for our purposes.
Yeah. And is that all in the US? Do you get into Canada, UK, anywhere else in the world?
Yeah, we are. We have Canada. We have prospects in Europe. We have clients in Europe, but those clients are supporting US small businesses.
I see.
But we're working with a few companies that are prospective clients now that have customers throughout Europe, and there's Australia and New Zealand, and so I think those will eventually land because even our tax engine we built to support U.S. and Canada, like all provinces in Canada as well, and we're gonna, when the right opportunities are there and the right alignment is there, we're gonna do it. There's no reason not to.
Right. How many people on your development team now?
Let's see, 21 minus 1, 2, 3, 4, 5, 16.
So it's mostly, so your kind of go-to-market is a relationship with a platform, and they go to market for you. So you have probably a sales-led motion to go, connect with them. But you're mostly a product dev shop. But you've done all of this accounting software, tax, payments, integration, and so forth with now up to 15. You've been hiring up probably, I guess.
Yep.
Is there some magic trick that you're doing there that says we have amazing productivity? Of course, you were doing this before whatever AI leverage for developers or whatever we think. How did you do that?
Well, I think the magic is that first 4 of us were from prior venture, and all of our engineers had domain knowledge in accounting that they picked up initially from the prior venture, and then we brought it over here because accounting is accounting overall. Yep. How do you structure it properly? And we were working with massive agencies. So I think that's the biggest thing, beyond other things.
But QuickBooks has, just for their QuickBooks online platform, probably hundreds or thousands of engineers working on this thing on the team, right?
Absolutely.
Something
I'm sure.
That. Yeah. And you got to, let's say, relevant feature parity with 10 or 15 folks on your team. That's just amazing. Yeah. And that's part of the practical founder revolution. You don't have to start with 1,000 anymore. You could just get going and build it up over time and so forth. How do you get these platform companies that put their brand on your software inside their platform?
How do we land them as clients?
Yeah.
Yeah, sure. So I'd say 40% come to our website organically through search.
Mm-hmm.
40% come to us through referrals that are relationship based, like there's no money changing hands.
Yeah. Word of mouth, you would say, I guess.
Correct. Yeah.
Yeah.
Better, a little bit better than that, but yeah.
Yeah.
And then like it'll be direct email intros from friends. Yeah. And then the last 30% would be from us reaching out, and prior to this past summer would be from me personally reaching out to a prospective client that I thought would be a good fit.
So you did founder-led sales here for
Mm-hmm.
this part of it. How much revenue did you get to before you brought in a salesperson?
Well, I mean, we just brought in like just
Okay, so here you are.
two
And so
months
these
ago.
are a bit larger deals, and they're very serious because you're embedding really core systems into somebody's long-term platform. It's not lightweight stuff, easy come, easy go. You can't turn it off very easily.
Yeah,
Um,
I'll say like we have some clients that started off in our early days. They started off at 4 figures in monthly in MRR,
yeah.
and now they're 6 figures in MRR to the
So
company.
you have the ongoing revenue retention expands because they put more customers on it. Presumably, your pricing is the number of customers that use that feature or something like that.
Yep. Yeah.
Wow.
So it's incredible to see that over a multi-year period, consistent growth from clients,
Right. So,
and it's
and
all
if you
aligned.
know
The
that your
clients are making
customers are
money.
going to grow, then
Yeah,
your revenues are going to grow within that,
absolutely. And the alignment is there, so the customers are making money.
and they want more,
Yeah.
even
And
more.
the thing I really love is that the small business wins in this whole thing. It's not like they
Yeah.
lose, they win.
Yeah.
Because in a lot of cases, they're actually getting the products for less than QuickBooks.
Yes, I'm
They're
sure.
getting it on platform. They don't have to do any integrations. Everything just
Already
works.
tied
All the data is
together. Yeah.
there. I mean, it's a true win-win-win, which is pretty
Yeah.
incredible because that's almost never exists.
And are you in the payroll and payments businesses, which QuickBooks distinguishes as different thing and charges extra, and has extra fees for,
We're not, but what we do is we have native integrations with the top providers. So we have native integrations with Gusto embedded payroll and Check embedded payroll, and then we have on the payroll side, and then we have native integrations on the payment side with Stripe, Move. I think we're going to do Adyen soon.
are you going to
And
get
a
into
couple
those
others.
businesses eventually, like all accounting software do, or no?
No, absolutely not. That because
Okay.
that's
That's a
where
different
our
swim lane.
customers make money,
Okay.
and so I think that's an approach that we've taken. We're neutral, but we provide the glue and we unify it all to our general ledger, so all the
Right.
financial statements are accurate.
Yeah.
But our customers make money off of that, and I think that's a good approach
Yeah.
because we're not cutting into vertical SaaS platforms revenue opportunities. We want to help them grow their revenue opportunities.
Right. So not they're not only going to get stickier customers, sell your accounting features as an add-on on occasion, and compete against better customers. They're going to enable more payments and payroll stuff that
Absolutely.
will create more income for them. And every vertical SaaS of a certain size is expanding the all-in-one, their share of wallet, all the functionality. And we heard from a few at the conference that started off with a certain price, and now the effective annual, you know, uh, revenue per customer for these vertical SaaS companies is 3, 4, 5 times what it used to be
Mm.
between the add-ons, the users, the upsells, the additions, the payments, the transactions, the services, and the all-in-one is taking over. Vertical equals all-in-one these days, it seems like.
Yeah, and the thing is, I think if you analyze the small businesses cost, they're either paying the same or less in total cost. They're saving a lot of time,
Yeah. Hmm.
and so it's just the everyone's
Yeah.
winning.
Yeah.
It's incredible. It's good.
Yeah. So you had some inflection points there, building the software, getting users to use it, end users, getting your first and second API customers, and you've grown since then. And now you've got a flywheel that even if you didn't sell a new customer, you're going to grow because your customers are growing their usage of your product, right?
I mean that's true, but we're getting
Yeah.
new customers.
Yeah, but you're getting more customers, and that'll pick up
Yeah.
and so forth. What do you see is the obvious future that you can talk about here for the next few years? Because this could turn it's already a good business. It could turn into a great one, moving
Yeah.
faster, you know.
I mean, we
Um,
are. If we think about like we grew the team 50% in the last 4 months. I
is
think
that adding devs and the sales guy?
correct, and I
Yeah.
think if we go like June to June, it'll be like double the team. Um,
Okay.
And so it's just growth. We continue growing. We've been building out what we call a solutions engineering team, which is not sales. It's actually helping clients optimize their implementation so they get higher take rates and attach rates
Yeah.
and better results, because we're already aligned on revenue. So we want them to get
You
more.
don't sell that. Do you sell that as a service? That's kind of their onboarding. You have that's your success team that goes in there
Yeah,
and
I
makes
would
sure it
call
all
it
works.
like almost post onboard, get them up and running, and then optimize
Oh,
once you
right.
start seeing data. And it's pretty
Yeah.
fascinating.
So
So
it's kind of
building that
like
up.
they would have a product manager for some features of their apps if it's big
Yeah,
enough.
I
And you're
think
like the
that's,
product
yeah,
manager people that look at that.
absolutely. Yeah,
Yeah.
that's what we're headed towards. It's like deep customer success, but for embedded clients, which really requires engineering capabilities,
Wow.
um, and just expanding everything. Like it really just bringing on more customers, and then you just keep expanding the team to support that.
Yeah.
Product will keep evolving. That's mainly coming from customer requests. So we're doing more native integrations with all the different things they're using, because when you're the financial system of record, you need everything in there so the
Yeah.
statements are accurate.
Connect to everything out there. Wow. That's amazing. And you're just scratching the surface of the tip of the iceberg of all the software products you could integrate with. So here you go. It's interesting. You just the time frames you're talking about, Raj. It was 5 years to get going, and then 5 years you picked up with VisualHOMES, and 5 years with SMBs, and 5 years with APIs, and your third 5 years. Are you kind of like changing your go long time chunks to 10-year phases? Something like that. Like, or I don't. You don't have. I mean, do you have a vision for 10 years out? You don't have to slice it up into chunks. You know.
Yeah, I think. Well, I mean, I talk about the next. These days, I've been talking about the next 10 years and the next 10 years after that, the next decade
Okay.
and 2 decades from
To
now,
your
because
team or in general?
both,
Okay.
because it's relevant. Because I think
Wow.
it's a we're just getting started. That's why I'm talking like that. I've seen the
Yeah.
inflection points. The market is ready finally.
Mm-hmm.
I think that's the part we didn't have any control over.
Mm-hmm.
Like they're done implementing CRM systems, so
Right.
now
They
now
finally got to this
yeah,
thing where they're looking at this level.
yeah.
Yeah.
Well, they have embedded payments came in, and then they started
Yeah.
doing embedded payments with money coming in. Now they started doing embedded payments, money going out. And so how are you going to reconcile all that? So those things are all big unlocks. And
Ah.
so there is no finish line in my view. It's more like this is the starting line where now we
Yeah.
have all these assets and we need to let more people know we exist and help them. And I love the win-win-win. So I think it's really just the beginning.
Yeah.
It's crazy to say after 10. So I could say probably 20 years from now, looking backwards, okay, these are the phases, but I'm in new territory for myself.
Yeah. Isn't that funny? That's right. You can look back and chunk it up. That's very wise words there. Um, and when you go long, you have to be sustainable personally, your life
Absolutely.
and health, and maybe take money off the table. So you're not starving yourself for 20 years in the business here. And you won surprise money before, but how do you think about the sustainability for the founders to be able to sustain that long term pace?
More just health,
Yeah.
daily
Okay.
health. Yeah. I mean,
Yeah.
personally, I've been since March 2020. I've always been in like focus on health, but since first week of pandemic, I transitioned to waking up really early and going to sleep early, because my kids were 2 and 4 year old boys at that time,
Oh, yeah.
and my wife, professor at American University, and we were all doing everything in the same house at the time, and it was a little crazy.
A little crazy.
So I switched to waking up around 3:34 and working out every day, and every day of the
Wow.
week, and
Yeah.
um, Groundhog's Day, and just stay focused. But
Yeah.
you got to have physical health that helps with
Yeah.
mental health, and then just focus, not doing crazy things, and not having too many things on your plate.
Yeah.
Too many things meaning like my buckets are work, workout, and family, and everything falls into one of those three buckets.
Right.
Um,
Simple.
yeah, very simple. Um, so definitely a lot on the plate, work wise, and family wise with two boys, and
Yeah.
but keep the buckets simple. But health is important. There isn't any concept here of like we don't need to take money off the table. Um, we
Mm.
don't live like a big life, just a normal life. overall.
And you're kind of the investor here, the primary investor, if you will, or you and your brother are, right? You
I think so. Yeah.
invested your time over all of this and literally wrote substantial checks into the business. And you invited somebody else in when you were, confident enough that you had a payback and that you had alignment with how they wanted to be paid back as well. Could you imagine if you see some opportunity, it starts to pick up, and there's a rocket ride opportunity to raise serious VC funding, or do you think uh, just the pace of this market and how you're approaching it won't require that at all?
I see both. I mean, but basically, I can't predict the future in that way. It's
Yeah,
I think it's good to keep an open mind. I don't have like hard, like
yeah,
absolutely hard
yeah,
opinions. Just like back when we took the little bit of VC funding, like I could have gone either way.
yeah,
And same in the future. Like I don't know what I don't know, and
yeah.
what I do know is that the one thing I do know is as we grow, we need excellent team members, um, and we have to grow the team. And the team could be full time employees. The team could be other folks helping out in different ways. And so I am trying to take a larger view of what team means. It doesn't have to only be full time employees. It's not going to be
And
part time employees. I mean, if you're an
right,
employee, you got to be full time, but
yeah.
it could be other folks helping out.
Well, you really haven't reached that, let's say, 25, 30-person thing where you have a little bit more management, involved, right? It's not a management layer. It's probably in your business too much of that. A little bit that the first management layer. But if you got to 100 employees, you would have some kind of hierarchy, an executive team, and so forth here. Have you put any structure in place? I mean, it's been 10 years with the company, just over 10 years, and you got 20 something employees, and it's starting to grow. Have you just been like the rock star team that everybody knows what's going on, and now you got to get a little more structured, or I don't know.
Yeah,
What's been your approach?
we've been putting measured, like we've been putting in some structure now because
Yeah,
we're going to be growing the team further.
yeah,
Um, and, and I think it's working out very well so far.
right.
So yeah, we're doing that. But it's still important to us that every single person has some, like if you are doing management, you still need to be an IC, an individual contributor, because
Yeah.
um, we believe in like servant leadership and other things here.
Yes.
Yeah.
Right. Excellent. What else would a new employee find very different when they join your company? Just to reveal some of
Yeah.
the inside the business magic trick.
Sure. Well, I think if it was an engineer, I mean, every single engineer in the last 6 or 7 years has gotten their first PR approved and merged within the first week, which is pretty insane for a brand new engineer.
So they've committed code to the core system
Yeah,
right away.
and it's torn apart, and there's a lot of feedback
Yeah.
before all that happens. But that's going on within the first week. And we hire a lot of engineers straight out of college, so we do extensive test
Wow.
projects before we give offers. So I think that's pretty remarkable.
Yeah.
So we're going for folks who actually want to work on stuff and not be buried in a cubicle in a big organization doing nothing for a couple of years, making
Like
good money.
Lockheed, right? Yeah.
Not naming names, but
Yeah. Yeah. Yeah.
I think I think there's a lot of talent out there being wasted, either by
Yeah.
choice or not by choice, and we have an opportunity here where folks can actually learn and do and get smarter. And we're looking for folks that have a high trajectory, and we're going to help them hit that.
Well, as your pace picks up, you're going to realize you have a real opportunity factory, as I've always called it here, to enable great people to do great things and to grow themselves and multiply their impact. And great people want to do great things, and they're looking for the place where they can make that happen. And it sounds like you're building an opportunity for that if they're not unrealistic about their timeframes, probably.
Yeah.
So great.
Absolutely.
Awesome. Well, what a remarkable story, and literally one of the flavors of the practical founder approach: white label, long-term, self-funded, a little bit of practical funding in there, selling inside the software companies, playing the TAM and time games there. Raj, what advice do you have most often for the SaaS founders you meet who, aren't trying to play the VC funding game, and um, they look at your successes and probably don't understand all the sacrifice and investment you've made and what you're doing differently? What can you share with practical founders out there that would be useful advice from somebody who's built two successful software companies like yourself?
I've always been very focused and serious about work.
Yeah, sounds like it.
Yeah, that's not for everybody. In this venture in particular, I personally feel like I've hit the holy grail, which is that it's my hobby.
Yes. Okay.
And I've seen things online where people think that if your work is your hobby, that's terrible, and I disagree with that strongly.
I do too.
Yeah. Because I love coming to work. I love working. I do it every day of the week when I'm not in the other buckets of family and workout. And I think I still do, I average like 70 hours a week, and I'm not tired from it. I love it.
Yeah.
It's a joy. That's not for everyone. For me, I think that led to success. I'm sure someone could show me some data that contradicts that, but
yeah,
I think if you're serious and you want to achieve certain goals, you got to cut out noise. And noise is not from your family. It's not from your, you got health is not noise. Noise is like how much partying do you do, or how much other things that just create a lot of inflammation, literally or figuratively. You got to get rid of that.
Yeah. A little bit like Warren Buffett says, when you're young, pick the 10 or 15 things you want to accomplish in your life, and then pick 3, and you've got your 3. So I've had a similar approach. I think you and I have been grinding away and being very productive through this, and loving what we do and the puzzles we play with and the customers we serve. So that's awesome here. Really appreciate you sharing your story about both of your ventures, Raj, on the Practical Founders podcast. I appreciate it.
Thank you, Greg. I really appreciate you taking the time. I loved being interviewed by you. This is great.
Awesome. Thank you.
Thank you.
Thanks for watching this week's founder interview on the Practical Founders podcast. Be sure to hit like and then subscribe to my Practical Founders YouTube channel to keep up with my weekly videos for serious software founders who are building valuable companies without big funding. Check out my blog and information about my Practical Founders CEO peer groups at practicalfounders.com. And follow me on LinkedIn to keep the conversation going. See you next week.